Okay, let's move on and let's welcome on board the management of Kalyan Jewellers. We've got with us Ramesh Kalyanaraman. He's the ED joining in on the show right now. Ramesh, wanted to understand firstly whether gold price volatility is really impacting big ticket wedding expenses. And have you seen that pan out throughout the month of March? Also, if you could give us a sense of what really is the outlook going forward, because now with inflation really biting everyone, wanted to understand whether the consumer is getting conscious on their wedding spends.
So gold price volatility has been there in Q4. It was very high. The volatility was very severe. And usually when the price is very volatile, people take a pause and wait for the price to settle down. But if you look at Q1 now, it has been more or less non-volatile and demand has started coming back. If you look at the first 40 days, the demand has recovered. We see good traction, customers coming back, and we are extremely happy with the outcome. Especially Akshaya Tritiya was big, and Akshaya Tritiya came in after 2 years of closure. So as we speak, we are extremely happy with the outcome for the first 40 days in the finance.
Sure. Could you break it up for me as to how demand has been shaping up in metros, in tier 2, 3 cities, as well as the rural belt?
First, let us talk about inflation. Inflation, the advantage for our sector is that if you look at Kalyan Jewellers, more than 55-60% of the revenue comes from wedding and wedding related. And wedding related does not you don't intend to increase or decrease your ticket size because of inflation, because it is a part of the custom in India that people spend on jewelry when they get married. So that advantage is there where inflation directly does not affect your wedding and wedding related revenue. Over and above that, the rest of the customers also. Here in India, people don't see jewelry as a fashion accessory. They see this as an investment, and they say this as a very liquid investment. And that is why, even if the inflation levels are higher, even if people tend to change the demand for other products, jewelry will be remaining in their bucket list, is what we have seen before. And we expect that it has to be the same even in the coming months or coming years.
Let's stay with this theme. With you're saying that when inflation goes up, it's actually good. But then why are the margins flat year on year? Talk to the viewers and your shareholders tuning in to ET now. And any guidance you can provide us, what they're going to be for the new financial year? What is it that you're penciling in?
If you look at the gross margins, we have actually improved by around 0.6% when compared to Q4 of the last financial year. If the EBITDA margins, it's only a marginal difference because the revenue we had a drop when compared to Q4 of the previous financial year. So otherwise, we think the EBITDA margins are going to be getting stabilized because we see demand back. We don't see major deviation in our OPEX. So we think that the EBITDA margins are going to get stabilized in the range of what we have seen for the past 2 quarters.
Okay, and if I can ask you about your overseas business, Middle East, how's that been doing? What's the plan for the new year?
So Middle East, again, if you look at the last 3 quarters, the demand has come back. So post-COVID, the Middle East revenue comeback was a bit slower than India. But if you look at the last 3 quarters now, the Middle East is doing very well. And if you look at Q4, we are almost at 85% of the revenue of the pre-COVID levels. And Middle East is back to normalcy again. And even if you look at this financial year, the first 40 days, Middle East is performing well. So Middle East turbulence is over, and Middle East has started performing like what we want.
And before we let you go, walk us through the company's store expansion plans. What's on the cards?
This financial year, FY23, we have plans to open 12 to 15 new showrooms in India. And over and above this, we have started to plan for franchisee support for expansion. And the first franchisee store should be opened in Q1 of this financial year. And we expect that the franchisee number of stores in this year will also be in the range of 5 to 6, over and above the 12 to 15 showrooms which we have planned to open.
All right, we'll let you go on that note. Thanks much for joining in and sharing with us the outlook on your earnings. Getting a